You're with us here on ET now, and it's been a big day. It's been a spectacular day, in fact, for markets, but also the way the government has come out and taken everyone by surprise and reassured them that they are listening. They are listening to corporate India. They have the answers. They're moving with the times, and they have come out with a spate of tax reforms that have made everyone, Nikunj, very happy.
Yeah, so frankly, the belief in the government that look, they are aware of what is happening around them, which way the world is moving, I think has come back.
Yeah.
So one, markets first were worried whether government was acknowledging the problem. They started acknowledging it. Then the second question was, did they have the ability to deliver? And third, will they take bold measures which may sound impossible to prove on paper, but sometimes extraordinary times require extraordinary measure. Do they have the ability and courage to do that?
Yes.
I guess government has demonstrated that they have the ability, understanding, and the courage to take bold measures to fix the economy. So I'll tell you what has changed.
Sure.
Let's look at the international tax rate, and for me that is the biggest story. That India now is finally at par with big economies where structural tax changes have come down. So that's where we stand, Abba.
Yeah.
25.17. There you go, right? 25.17. We're exactly in line with China.
Yeah.
This rate was above 30.
That's true.
Hong Kong, of course, is not a manufacturing economy. Singapore is not a manufacturing economy. Let's ignore those two. India will compete with China. India will compete with USA. You will compete with other markets like Brazil. So now you are at par. Now what does corporate India want? They want a stable tax regime, lower taxes which are competitive. Don't do any extraordinary favor, but give them stable tax regime where they can compete, and a lower interest rate regime. So interest rates are headed lower.
Yes.
Tax rates have come down.
Yeah.
So the affordability, the scalability, and also the whole global competitiveness, which in a sense was missing for Indian businesses, I think makes a comeback.
Those are some of the key points that we're looking at, and let's in fact discuss this further as well. We have Mr. Gupta from Havells also joining us. Anil, given the kind of reforms that we've heard announced today by the finance minister, has this really completely turned sentiment now, according to you, showing that the government is really indeed listening to corporate India and to their demands?
Absolutely. I think, ever since last 1 year or so, there was some amount of feeling of a low feeling amongst the corporate India in terms of investments, the way things are moving. But I think the way government has responded with not only today's reforms, but over the last 1 month, the way they are coming back with measures to improve the economy. But I think today was the big one. The fact that we are wanting to become globally competitive, that's a big one from the government. And I think the corporate India now has to really respond in a big way in terms of, the outcomes that I feel out of today's decisions would be that the corporates would be far more optimistic, and with optimism, as well as more money in the hands, which should improve investments and hence overall, employment generation. I think there's just one decision is, creates such a big virtuous cycle. That's what I think the positivity is there about. And I still believe the biggest thing which it will do is turn the mood completely in corporate India. So that's a big one, I think.
Well, what changes in your life? If you were, let's say, last evening slightly tentative about investment and spending and demand, what changes in your book now, for you personally as an entrepreneur and for Havells as a company?
Look, as a company, as an entrepreneur myself, I've always been very optimistic. It's just that, things were not moving in the right direction globally, as well as, the economy was not really picking up in the last 7-8 months. A lot of things happened. I feel in the last 2 or 3 years, a lot of good things have happened, whether it is, in my opinion, GST reforms, demonetization. I've always been an optimist. It's just that everything came together and things were not moving in the right pace, the way it should for a growing economy like India. For what it changes is the way we start looking at the future. And if the future looks bright, the government is going to respond, whether it's good times or not so good times. And I think that's what changes, and that's what builds confidence in minds of entrepreneurs and corporates. And if you feel, if in tangible terms, if it will definitely mean more investments coming into into the fore. And I think the big message which today came out is the fact that if whether it will directly impact the large corporates or not, but in terms of providing a big tax relief to new manufacturing companies, that's a big one because last few years we've been hearing about startups and all, and generally startups are more looked at as new economy businesses. But today, when the new thing which has come is the manufacturing is being supported in a big way with 15% corporate tax. I think that's a big one, and that's how I think this will really start the whole process of Make in India, at least in the minds, and then eventually it will come on stream as well.
Sanjay Nair with us of KKR. Sanjay, great to have you with us. Nikunjan Abha here in the Mumbai studio, and we're sort of going through step by step some of the government's big moves today. Hearing from the finance minister on some of those key tax reforms. Does this now open up a plethora of opportunities, Sanjay, given that it's going to completely lift the mood as we've seen reflected in the markets today?
Yeah, I agree. I think it's going to definitely attract more capital. I think the announcements combined with all that's come on the surcharge front as well should attract a lot of capital. So I think we've already heard a lot of comments about the government being extremely responsive. I think that's all great. I think it's up to the corporates now to use this change in mood and to look into the future and to really up capex and investments. If they see the demand, which I think is probably there, they should also use the opportunity to repay debt, those that are over-leveraged, and try to correct the debt situation. And I think finally, ultimately, equity markets can go up for a day or so, but on a long-term sustainable basis, this makes Indian corporates and of course new manufacturing even more competitive comparatively to the Asian economies and to the global economy. So I think it's a real positive, but a lot of it comes back to all of us in the country to really step up now, at least from a foreign inflows point of view for, again, private equity and our asset class as a whole. I think clearly this is a positive, but ultimately we all back growth. So I think the companies have to really step up now and play with a much more of an offensive stroke to really instill capex and investments. I think that is key.
All right, Sanjay, do stay with us. We also have Ms. Reddy with us as well as part of the discussion. Preeta, just talk to us about how you're viewing the reforms today, how it will affect you as a business. What's the kind of immediate impact we can see, the kind of earnings revival that we can look forward to?
One is, we have to really thank the government when there is a very decisive move. It really helps the business or the industry. And for us, while we're a healthcare provider as against manufacturing, we really are the largest job creators as an industry. And we will see that question being answered because a lot of capital was not deployed. Expansions were put on hold because we were not even sure how things were panning out. So with the boost in the manufacturing sector, with the mood changing with investments, I think people will start again investing more capex into what they're doing. And when you expand, obviously there are jobs. We as an industry still have a few issues on pricing and GST, but I think I must give the government credit that they are listening to industry. They are looking at the sectors and seeing how can they help with job creation, with manufacturing or increase in revenues, and more than anything else, I think capital deployed. So I do see it as definitely a good thing for the healthcare per se, but more than anything else, when manufacturing kind of kicks in, then the retail spend becomes more and people just start, so the economy automatically gets better. And I think when that happens, it's like a cycle, so everything else kind of moves in well. I must also say that, we're at a time where India can genuinely become a manufacturing hub, especially of high-end requirements, whether
Sure.
it's, in the devices or in any
Preeta,
other sector. And this
completely
is
get
a
your
good time
point.
to do it.
Absolutely, completely get your point. Sanjay, I want to pick up on what you said that, capital backs growth. There was a time when we had such a strong momentum in India. We had quite a long lull in the middle, and I think questions were being raised as to really what was going on. This has reassured investors, and I'm going to ask you that. To what extent has it reassured you that the government is committed to its plan to make sure India is back on track for growth? And what kind of growth would we be looking at then? What would be, according to you, a reasonable level? Would we be looking at 6, 7, 8, 9? What's the aim?
Look, I'm not an economist, so I don't have any formula, but I would say getting back to the 7% should be step number one. I think that's imminently achievable because a part of our downturn is cyclical, and I think that should be able to come back. Let's wait for the festive season, and we've had good monsoons. I think the supply side is one constraint we have had. So with this kind of a tax cut, if the corporate India can step up in different sectors to increase the supply side, I think then you're getting into a bit of a virtuous cycle. And because this has been sort of a short duration slump, it's very easy to come out of it. It's not a very deep slump, and it's a bit short. So you can actually come out quite quickly and revert back to 7 rather well. I think the larger question is, from 7, how do we go up? And I think from long-term investors' point of view, we have to look way ahead. So the structural things, I think, are still very critical. This will, I think, maybe it's fiscal neutral, maybe it's not, but we got to get the fiscal balance back. And I think there are lots of good things that should be done as a next step on that, so that the rates can remain under control, the currency should remain under control. I think if those two things can be kind of balanced in the next, I would say, 12 months, I don't see getting to 7, 7.5 as a problem, but we should really be aiming much higher, and I think this is a great first step. So I'm actually quite optimistic about this, and I think you're just going to see lots and lots of dollars coming into India.
Okay, let's also bring you a whole spate of other corporate reactions as well. We're in conversation with Sanjay Nair and Preeta Reddy, but we've also been speaking to and tracking for you all the comments coming in through the day. Pavan Goenka saying that this looks like Diwali has come early. It really does. I think in the mood that we're going home with today and the kind of close we've seen, the best ever gain, for the Nifty and Sensex. Kiran Mazumdar Shaw saying that the corporate tax rate is definitely going to spur growth, and it's a great move to revive growth and investment in the country. We've got a whole host of others as well. In fact, she's also said that hats off to the FM. Gautam Adani, Nikunj also saying it's a welcome move by the Honourable Finance Minister amid challenging times. Again, that it will infuse confidence in the economy. So look at the key words that are coming in here. They're saluting the Finance Minister's move. They're saying it's significant. And Chandrasekharan also saying that it's a big respite, which would give the required stimulus required. And that's a big number when we're looking at that stimulus number. We were discussing this through the day today, Nikunj. And the fact that it's about that 20 million number is just in the span of the next 6 months that we're going to see it infused in the economy.
Yeah, I mean, to put it very simply, this is a tax rate for this financial year. The tax rate comes down, the advance tax payment has been done, the next installment of advance tax changes completely, which means corporates will have more ability to spend.
Yeah.
On paper, lower tax rate, lower interest rates, they spur investment. But will it really happen? Ms. Reddy, what is your sense? Today we are getting excited about lower taxes, Reserve Bank of India is cutting rates, but will this really translate into corporate activity? Ideally, corporate activity should have picked up in 2014 and 15 also, when the regime was very interesting and encouraging. It never picked up on the capex side that time also. I think she's not able to hear me.
Okay,
So,
Preeta, can you hear us? Okay, we'll go back across.
Hello?
Yeah, Preeta,
Yes.
go ahead.
no, Ms. Reddy,
Can
my
you repeat?
my question to you is that today it's the day to celebrate and everybody is excited, but there's always a difference between sip and a lip. Do you think lower interest rates and lower tax rates are a necessary condition but not a sufficient condition for the capex recovery to pick up?
I think it's what we say is as good to have, so it's definitely better than not having it. What the corporates have learnt and what we have learnt as a business is really to cut our costs, to do what we're doing so much better at a lower cost, and that has been the learning over the past 24 months, and that is a distinct advantage in the way our EBITDA numbers are going to come out. So with that on one side and the fact that we are having this impetus, I think it's really helping the industry tremendously. But what has happened is, I think corporate India can't complain too much. You know, we went through about more than 24 months saying everything is wrong and everything is bad. And now I think it's up to us to see that we perform and we can really do much better than what we've been doing over the past, I think, 6 quarters, if I'm right.
Sanjay, if I work with the assumption that tomorrow will be better than today, economic recovery, it may be slow, but economic recovery is going to be coming back. What kind of economic picture or demand picture, Sanjay, you would like to forecast or you believe is there in making for next 3 to 6 months or 6 to 12 months, Sanjay?
I think I already answered that. I think if the bottom line is to get to 7.5, which I think should be easy in the next year itself, I think the key is a pickup in consumption. Just seeing the effect of the way the equity markets have reacted today, and I think they will sustain. That itself gives a bit of a wealth effect. I think you'll see some imminent spending coming back. I cannot imagine that sales of so many goods, as I said earlier, the slump in consumption has been quite narrow, but also very shallow. So very easy to come out of it. Nikunj, and that's the assumption number one. So we can watch the numbers, I'm sure, the next quarter. I think this will be a very quick rebound. If that happens and a lot of the corporates can respond with more capex and investments, I think that's your step number one. If that happens, I think in 6 months, you begin to see a virtuous cycle build up, unless you believe, which none of us do, that India structurally on a long term is not a great story. So I think India structurally on the long term is underpenetrated, underconsumed, underinsured. Everything is, pretty low. So long way to go, whether it's healthcare, it's education, it's financial services. So I think you have to revert back to the long-term thesis once you have 2 good quarters behind you. And this, I think, could be an interesting catalyst to get that mood swing. I think it's pretty straightforward as that. Don't think you can get more mathematical and formulaic driven right now.
What's the forecast on manufacturing specifically, the kind of foreign direct investment we might see coming into that space? We are ripe for demand, but this will really help to make things more competitive, more affordable, have the biggies of the world, the techies perhaps come in and look at India more, more as a more attractive space to set up. What do you think?
Are you asking me?
Yes.
Look, I don't have any number for manufacturing, but I would say that given all the things that we're doing on doing business in India to make it easier for the Indian entrepreneurs first, I think that is step number one. And if that is going along and you have certain reforms, bureaucratic and admin reforms hand in hand with this, I think you will find a lot of local manufacturing activity picking up. The supply chain discussion that we've been having for a long time generally, that we should be benefiting from the US-China trade kind of a discussion and have more supply chain move here. It's actually quite simple. I think we just have to get the focus back on the availability of the land, obviously, electricity and power. And I think there are some interesting opportunities there for locals to pick up certain areas and start building out new manufacturing units. So look, it's going to be step by step. I think we have just been very underwhelmed generally as a country right now and quite subdued. We need to come out of that. And again, I come back to the point, this is a huge stimulus. How we react to it depends a little bit psychologically as well. I would say if it's a positive psychological kick, which it should be, you could see a pretty significant pickup in small manufacturing. But as I said earlier, the main thing is the large corporates have to start doing capex and investments again. That is the most important thing. correct the debt situation. Hopefully the credit markets get better and the supply chain and the SMEs that service these big corporates come back into the manufacturing gear. So it's going to take some time, but I think, again, this is a good start.
All right, we're almost out of time. Just closing comments then, Preeta, from you. Would you give it a 10 on 10 then, the kind of reforms we've seen today? Would you give a full thumbs up? Was there anything else you would have liked to see or anything else you're still waiting for?
I think we must give credit for decisions which are being taken. It gives us a sense of security. It's too early to say 10 on 10 because, we need to see how the industry picks up and markets pick up. So it's a bit early to say 10 on 10, but definitely it's like a 7.5 to 8 on 10, which itself is a good thing because, we were so worried about just the economy and the numbers. So overall, I think it's a good thing which has happened pre-Diwali. So of course the mood is better. And it will help us drive our collective dream together to see if we really get to that 5 trillion economy figure. I think that's what every Indian wants. So it's work in progress, according to me.
Sanjay, Preeta, both of you, thank you so much. Yes, Sanjay, go ahead. Go ahead. We'd love to hear your.
Great.
Yeah. No, go ahead.
I was just going to say, I'm not giving any. Okay, I was just saying. Okay, no, I think if we can get certain moves by the government now on asset monetization, which can give all of us the confidence that there are revenues coming in as well on the fiscal side, because I think there's a bit of a strain on that end. I think that makes it maybe the next bunch of moves are more towards asset monetization. I think that would be really a 10 on 10 if that comes along as well, because ultimately in the long run, you do need a very healthy fiscal health as well. And that's the only way you stop crowding out the private local savings. And the private local savings are very critical to come back into the local debt and equity markets. Ultimately, that's the long-term sustainable story. So I agree with Preeta. It's like an 8.5, 9, but the next few moves that I hope the finance minister announces, balance the maths and gives us confidence that private savings can come back into the real markets in India.
We'll take that. We'll take the 8.5 or 9 this Friday, Sanjay. I think we're all going to let our hair down. But thank you so much, both of you, for joining us. Great having you on the show. And we look forward to continuing to have this conversation with you as we move forward in India's growth story. From Nikunj and myself, thanks so much for watching.